The Finance Minister, Seth Terkper, says the 19% rate for the recently issued 10-year domestic bond is one of the cheapest on the market comparative to the other bonds issued by the country. At a media briefing, Mr. Terkper said Ghana has issued some bonds recently hovering around 10.7% at shorter periods. Therefore, issuing a 10-year bond at 19% is best in recent time. He said the sinking fund has given the country the needed buffer to service its debts prudently and even buy back the maturing debts of the country, as well as going into the secondary market.
Government 2 weeks ago issued the first 10-year domestic bond at a coupon rate of 19% for a 10-year period. According to Finance Minister, the offer, which was open to foreign investors, drew bids of 726 million cedis, but the government took only 438 million Ghana cedis. The amount is expected to service government bonds which are nearing maturity and also to run other government businesses. The 19% rate for the bond has received criticisms from financial analysts saying government could have gone for a lesser rate. However, the Finance Minister, Mr Seth Terkper, believed that the 19% rate is very competitive and it's good for Ghana, judging from the rate the country got from the 2-year bond issued in October this year.
What is the context of the 19? You know, when you say that 19 is too high, what is your context? Let's go back to the way we handle our bonds. When we issue treasury bills, we don't redeem them. We don't pay back. Hardly, until we started using our sovereign bond. You have 5 years, you don't have money to pay the loan, so you refinance. So assuming you issued at 22, the markets realize that you don't have money to pay back, so your refinancing increased to what, 24, because that's when you also had gold, cocoa, and other prices, falling. Right? But what have you achieved? The same 5-year refinance, a second time, becomes 10 years. So what's your rate? Effectively, the 5 years, a 10-year bond at 25.
Mr. Terkper said, though the 19% rate is cheaper, government will not shift its focus to domestic markets to raise bonds.
The capital market is open to me, the domestic market is open to me. And so particularly in the financing of long-term, major road projects, major, counterpart funds and things, I don't have to be looking to the short term. And if it's a domestic market that is liquid and the rates are good, I'll come to the domestic market. If it's a foreign market, I'll go to the foreign market.
Government in October this year issued a US dollar denominated bond on the domestic bond market. The 2-year bond, which according to the government was highly subscribed, yielded $94.64 million at a coupon rate of 6%, consistent with the initial price range of between 5.5% and 6.5%.